The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw the grain and oilseed markets again quietly mixed to lower on the day, with the livestock complex mixed on Tuesday. Some outside markets under pressure as well, notably crude oil, the NASDAQ, and gold. Plenty of things at play here overall. It felt like a fairly quiet trading day. Let's talk about it. Joining us for a conversation, Bryan Irey with Crossroads Coop out in eastern Colorado. Bryan, it's good to catch up with you again. Thanks for joining us on Market Talk.
Absolutely. Thanks for having me again, Jesse.
Well, I'll start with the grains and oilseeds and ask you if my summation was correct of Tuesday's trade. It just felt very quiet. Soybeans tried to rally the whole complex, but it just felt like there wasn't enough bullish information out there to move us fully into the green on Tuesday, Bryan.
I would agree with you. It was somewhat of a strange day. I thought early that we were going to take another turn downward, but as you mentioned, the beans did try to rally mid-session and pull things back up, but we just couldn't generate enough interest to get corn back into positive territory, and the same with KC wheat. Just a very, very lackluster day, and I think a lot of anxiety out there over tariff talk, and the weather is improving in Argentina specifically, it appears.
Yeah, that's a good point. It seems like that weather forecast in South America continues to be more bearish than bullish, I guess, in this window as we look to close out the month. And looking at these grains as a whole, I think that's another thought I want to ask you about. As we're getting to the end of the month, we typically see that positioning, through first notice day, options expiration, all these different things, funds, their positions in the grain markets, particularly very long in corn. They've liquidated some in soy, and we know they're still short in wheat. I mean, you just look at all these different factors. What are some things on your mind here as we near the end of the month, Bryan?
Well, I think you're dead on. I think beginning last Friday, these grain futures just really kind of went into a little bit of a tailspin. And I think at the top of that chart, I would have to list commercials rolling from March futures to May futures has played into that, and you never know which way markets are going to go when that happens. But we've definitely had a negative tone here. I think that managed money is a really interesting situation. You touched on that, and the funds just continue to want to get long corn, it appears. I was a little bit surprised that they had added to their length last week, but they obviously had. On the wheat side, I think there's a very interesting story developing there with wheat, with the issues that you have in the Black Sea. I saw the Oklahoma crop ratings were down pretty sharply this week. It appears to me that wheat could make a run here if the funds decide that they're going to get out of that short, and they were still plenty short late last week when we got the COT report. If they would happen to blow out of that short and try to go long 300-400 million wheat, there's no natural seller there today, as I heard someone describe it. So I don't know where you slow it down if it does take another run like it did last week when we got very close to resistance levels. I think we were a nickel away, and should we blow through those areas, it opens that, especially in Kansas City, wheat opens it up back up above the $7 level.
As you're looking at any of these grain markets, and you brought up the commercial side, that March-May spread in futures, and you could probably tie in basis here as well into this conversation, but do any of these spreads stand out to you? Is there anything screaming, hey, we don't want corn, beans, or wheat, we want you to hold it and roll it here? into further down the road when it comes to old crop? I mean, what are you watching on that side?
I think especially in wheat, that is the case. You look at the carries, you have what, almost a 60-cent carry here out to December of next year, or I'm sorry, not December of next year, December of 25 in Kansas City. I think that is a true indicator that the market doesn't want the wheat on the front end. Plus, the front end basis is that way too. And I think you see that in corn here on the front end, especially with the 14, 15 cent spread that we've seen here the last couple of days in that corn spread. The market's saturated on corn on the front end. I mean, especially here in the West. I think when you get back farther east, we've seen maybe bids pick up a little bit here basis wise the last couple of days. But the market, I think, has a lot of uncertainty after that. I think just as interesting as the March, May, the May, July is very interesting too. It has widened out to a nickel now, but certainly not any incentive to carry corn out that far.
Well, and you mentioned this to me as well before we went on the air. You kind of been tracking the balance sheets on the world side for corn. I know we're going to get the USDA Outlook Forum here this week, and they'll give us some updated numbers as well. That could be a talking point. But, thinking about the overall world balance sheets, the U.S. balance sheets as we head towards spring planting, all this talk that we could see a massive corn acreage number and more. I mean, in your eyes, what's going to be key over the next several months when you look at the corn balance sheets?
Well, as I mentioned to you off of the air, I think this world situation is very, very interesting, and I think this information that I was reading here a week or so ago came from Reuters in a really in-depth study. But I think what it comes down to is that 70% of the world's supplies right now are in China, which essentially makes them inaccessible to global trade. And I think when the market rallied here 10 days ago, when we finally got through that $5 level and up towards 505 in the March, I think it was basically because of this kind of information beginning to float out there. And when you stand back and look at this from 50,000 feet, it maybe explains why the funds are so long corn too. Up there around 1.7, 1.8 billion bushels, is that we do have a tightening situation. The stocks are going to apparently come in at about an 11-year low. It shines a different light on things, and I think part of that was the rally in wheat too that we saw about the same time. Is that I think maybe you started to get funds a little bit scared here that wheat becomes more of a feed grain, maybe not domestically, but globally it does with tighter stocks. But without China in the picture, you've got a stocks to use ratio at 7.8%, and that's the lowest it's been since 95, 96. And enough to raise an eyebrow or two, I think, around the trade. It certainly puts a lot of significance on the U.S. raising a crop this year, I think, on the corn side especially, Jesse.
How about some notes over in the protein sector? We should go over there real quick before we wrap up our conversation today. Cattle, a couple good days futures wise. That cash trade, though, this week, I'm curiously watching that after we were 4 to 5 lower last week. Any notes for you on the protein side, particularly in the cattle markets?
I spent a great deal of time with one of the guys that I lean on a lot, who is out of Memphis earlier this week, a former Sparks guy that is just excellent on the cattle side. I think he is not perplexed. I think a lot of this stuff makes sense to him in terms of supply and demand, and essentially demand remains very good. Cattle supplies are tight, and it's one of those situations where I feel like maybe we have peaked out here for the short term. It certainly appears. But again, you mentioned there was a lot of volatility in especially feeder cattle this week, and I have not heard anything on cash trade on the live cattle side this week. But I think just from a broad overview, it doesn't look like the volatility is over with there. But maybe we've peaked here on the cash cattle side for a minute.
It's going to be an interesting thing to watch. Anything on feed margins? I know you talk with a lot of folks out there in the plains and feedlot country. Anything there of note?
Nobody is screaming about margins at this point, and I think they probably shouldn't be. They've worked through some cheap corn, and I think with the for the hedger, the cash prices that we've seen trading here have implied that they should be in good shape. And when you have high cash prices, obviously the guy that isn't hedged is going to benefit as well. So it hasn't been terrible. I think the big question is where the next round plays out, when you start seeing these cash prices that they're paying for feeders are just absolutely astronomical. And my guy in Memphis still raises the question about how long this situation continues, just due to the fact that heifer retention has been so poor with the high price of feeders. And, you still have that situation with the ranchers trying to get out of the business, don't have anybody to pass that business on to. So it just seems like we are a long way off from solving the supply problem.
Bryan, any final thoughts you would mention or reiterate to folks across the board here today?
I think on the corn side, just very, very quickly, we still have export sales that are unshipped. They just seem to be hanging in that 900 million bushel range. I think that is something to be concerned about. I don't know if we see cancellations down the road as South America becomes more of a player on the export side. I certainly feel like that could begin to happen, but we need to keep an eye on it. And I think the other is the trade is going to be ultra focused on the March 31st prospective plannings report. And I still have to say, there's a lot of moving pieces here, but I don't see the USDA changing anything materially in the balance sheets for some time. So we're going to be trading this 1.54 billion bushel carryout for a while. I'm not sure that 93.5 million acres of corn is too much under that scenario, but I do feel like if you start getting up into that 94.5 to 95 million acre plateau, that it does change things very, very dramatically in terms of supplies, especially when you factor in that there could be unshipped export sales this year.
Well, I always enjoy the conversation and the perspective. Bryan Irey, Crossroads Co-op, thanks for joining us here on Market Talk today. We'll wish you a great rest of the week, and we'll talk to you again real soon, Bryan.
Thank you for having me again, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.